Yo, what is good, YouTube? We're back with another video. If you guys are not in the free Discord, go join it. It is the first link down below. This video is going to be open low high close and open high low close. How to understand basically the anatomy of a candle, right? Every single candle that is created in the charts, a red or a green or a red candle, always has your open, low, high, close, or your open, high, low, close, right? So open, high, low, close is your red candle. Open, low, high, close is your green candle, right? So to understand, right, the basic of this is we want to be getting in where? At the bottom of the wick, right? We want to be trying to enter if it's an open, low, higher close. If that's what we are anticipating, if we are anticipating bullish structure and we are going to go on buy side of the curve, right? We want to see buy side of the curve. So this is like an hourly, even a 15-minute candle. And I'm going to show you guys that this works on literally any time frame, right? We want in as close as we can get to the wick of the candle or the opening price, right? Same thing with the open, high, low, close. We want to be getting in at the top of the wick or close to the open of the candle to anticipate what? Sell side of the curve, right? We are anticipating it going on sell side of the curve, right? So how do we understand and anticipate, okay, well, this is going to be a bullish up close or this is going to be a bearish down close, and I'm trying to get in at the bottom or the top of the wick? That is going to be identified by higher time frame key levels. So let's say this traded into a order block, sell side, or a fair value gap, right? Literally any of those three PD arrays, right? You obviously can use the other ones if you like them and choose to, but I like those three, so that's what I stick to. So we see this higher time frame candle dig into that higher time frame PD array. That's whenever we go to the lower time frame, say the 1 or 5 minute chart, and then, right, so we have this creates our low. We are looking for displacement, fill out an imbalance, hit the breaker, something like that, and then we want to get in for the high and then the close, right? So this big candle is going to have all this lower time frame price action, right? So we want to get in whenever we hit that PD array, get the displacement, get in here, here, turtle soup, or the second stage distribution, right? Now the other one, right? Say it came into, let's say, a fair value gap. We want to get in where? Well, if it opened, created the high, displaced lower, same exact thing, right? This is ugly, but you guys get the gist of it, right? We want to get in at the displacement leg, the turtle soup, the breaker, or the second stage distribution, right? So that is the basics of open low high close and open high low close. Now, if we literally, I still have my drawings on here. If we literally want to go into the charts, go to the hourly, right? We can do this on any, we'll go through multiple different patterns or multiple different time frames. But let's take a look right here at this candle, right? This candle right here. What did this candle dig deep into, right? We had a, like I was saying in the Discord, I was anticipating Tuesday to be low of week. Why? We take sell side, displace higher, creates an order block, fair value gap, breaker, right? We have three PD arrays that are high probability, all in alignment, right? So what did we do? Well, we dug pretty deep into this order block, right? So we came down to mean threshold of this order block, right? So go to your 1 minute time frame, right? What do you guys see here? We're kind of accumulating there, right? So what's the first thing that's going to happen, right? We get our CISD, right? This is going to be your high probability order block. Close above it. You can use this one or you can use this one. Doesn't really matter, right? The entry is very close together. It's 4 points, right? So this is the first thing to happen is your CISD. What's next? Inverse fair value gap, right? So we come up, close above this inverse, come down, tap into the order block, expansion, right? Fair value gap never gets filled out. It's a breakaway gap, right? Okay. And then we continue up to, well, these highs, but we had a retracement, right? What did we retrace to? Right here, 15-minute fair value gap, right? Now, what do you notice with this wick, right? Open, low, high, close. So if you would have entered, you would have gotten in somewhere down here, right? Yeah, order block, inverse fair value gap. Unfortunately, we never had a fill of a regular fair value gap, but if you used one of those PD arrays, also we have a breaker right here, right? Swing high creates the breaker with a lower low, taking out this low, right? Expansion away from it. Now, let's say that we did enter here, right? Let's say we entered here. Go to the hourly. We get in at the bottom of the wick. Now, if you missed that, right, 15-minute chart, what do we see right here? 15-minute fair value gap, right? Comes down, takes out this candle's low, right? It closed below this candle, so this candle here should take this low, right? So, what do we see here? Right? Comes down, takes that out. Never get a CISD there. But what do we see right here? A no wick candle, right? So we have a no wick right there, right? No wick. And then we get our closure above the CISD with this candle right here. Now, unfortunately, right? And then you have your breaker here. Once again, we never fill out a fair value gap until we hit the internal draw, which was up here. Okay? So, if you would have entered, say, at the CISD, you would have been getting in kind of close to the opening price, right? It's, what, 65? 15 points, right? But then we come up and hit internal range liquidity, this 15-minute fair value gap, right? So, right there is two examples of what happened today, right? So, let's see if we can go to the 4-hour and see if we can find a good bearish example, right? So this looks like it could be open. Okay, so what's our higher time frame key level, right? These highs, okay? When does New York open? Let's find that out. This isn't going to be too good. 8:30 is right here, right? So let's say that we traded London session, right? London comes up, makes high of day, right? And then I wouldn't trade it on the 1-minute chart. But what do we see here, right? Comes up, turtle soup. Okay, turtle soup. CISD right here on this candle. Right, comes up. Let's get rid of this box. Comes up, taps the order block, displaces lower. Right here, right before New York opens, what do? Turtle soup this high. Is that a 15-minute fair value gap? It looks like it could be, but it's not. Okay. Comes up, takes out this swing high. CISD here. Right? Paired with a fair value gap. Okay? So let's say that we entered down here, right? Stop at the swing high. Where are we getting in at? Above the opening price. We are getting in at the wick of this candle for distribution lower, right? So what do you target, right? You can target new day opening gap or new week opening gap actually, and then as well as these swing lows, this swing low, and then I don't know if we get down to that swing low. Yeah, we do. Okay, so we tap that swing low, right? So it's a Monday. What do we expect? Not really a huge expansion, right? So this candle comes down, takes out this sell side liquidity. Go down to your 1-minute chart. What do we see here? CISD, right? Down close candles that dug into the liquidity. CISD, fair value gap. Taps into it. What are we targeting? Internal range liquidity, this high, right? So comes down, fills out this fair value gap, order block, displaces out of it, right here, fair value gap, order block, and then goes to that internal range liquidity, right? Open, low, high, close. So if you would have gotten in, let's say right here, where would we be getting in at? Very, very close to the opening price, right? So think of these candles as discount and premium, right? Everything starts with discount and premium. The open below, if it's a bullish candle, is going to be your discount. If it's a bearish candle, the open high is going to be your premium, right? We always want to be getting in at a premium if we're shorting and a discount if we are longing, right? So that's not really any good examples, right? And then this looks like a straight expansion day. Okay, 6 a.m. That looks like news. That is midnight. Okay. Oh, that was election. Okay. We can do one that we just had a regular expansion, like right here. So you guys see that these 1 hour candles barely have an opening low, open low, right? They barely have that, right? So what if we're just going to have a straight expansion? What do we want to go to? 15-minute chart or the 5-minute chart, right? So even the 15, right? 15 has no open low really, except right here, right? So let's take a look right here at this candle. I wonder if we formed an SMT there. Whoa. What is this? Let's see. Did we form an SMT here? Yes. So we form an SMT. Right here is the same candle on the ES. Right here, SMT. Go down to your 1 minute chart, right? SMT, higher time frame key level. CISD happens up here, right? But what are we waiting for, right? What happens all throughout here? Inverse. Clearly bullish on the day, so you don't want to be fading it. Inverse. Fair value gap, fair value gap. So what would our main eye be looking at? This inverse. Why? It is the main objective in discount, right? From this leg that formed the SMT, discount. Inverse fair value gap, you can even make it this right here for an inverse BPR, right? This is now a BPR traded through with fair value gaps, and then we expand higher to take out this high, right? So let's say we opened up a position right here, 15-minute. We would have been getting in at the wick of this candle below the opening price. Where does your stop go? Down here, targeted 2R, right? So another thing you can do with these is do what? Take out standard deviations. We eventually get up to -2 standard deviation, right? So this is literally all it is to do open high low close, open low, or open high low close. Try to get in above or close to the opening price on a bearish candle and below or close to the open on a bullish candle. That's it, right? If you guys have more questions, come join the Discord. I'm going to get out of here. Peace.